Ladies and gentlemen, the biggest threat that the market has been facing recently is the fears of recession, right? Unemployment started to tick upwards. That was very concerning because when it does that, it goes and spikes upwards shortly after. And generally speaking, that leads to recession. Now, luckily, we've seen unemployment data come in just a couple of hours ago here. It came in very good. We need to discuss that today. The S&P 500 and traditional markets in general are on the edge of making a very, very important decision. And this decision will basically result in whether the market goes upwards into a bull market continuation or downwards into a recession and bear market. So very important period of time for the S&P. Same degree of importance really on Bitcoin. Bitcoin, of course, in a massive channel structure, and we need to discuss that as well. Some short-term developments going on there, and we need to look at the key levels. So a bit of a broad analysis looking at traditional markets and Bitcoin, but we should be able to pump this information out within 10 minutes, I assume. So before we get into the content today, guys, go ahead and check out the Bitunix and Bingx exchanges. If you need a new exchange or you need an upgrade, a better exchange, I highly recommend you check out Bitunix or Bingx. They are both global non-KYC. In wake of all the regulation, these exchanges have remained global non-KYC. You can sign up from anywhere in the world, no identity verification required. They've never been hacked before. They're very low in trading fees. And with my 15% trading fee discount, which you can get with my referral link down below, they're even lower in trading fees. On top of that, 5,500 USDT reward upon sign up. Or for signing up in the reward center, I should say, on Bitunix, a chance to win that. And then Bingx is the same story. You can complete rewards in the reward center, 5,000 USDT on Bitunix, 4,000 on Bingx. So let's get into the content. My links are down below. Check those links out. Guys, right, let's start out with traditional markets. What is the reason for Bitcoin dropping downwards recently? A couple of weeks ago, now about 10 days ago, Bitcoin crashed downwards, and it was a crash, let me tell you that. In about 7 days, it went downwards close to 30%, which is just, I mean, maybe even it was more than 30%. Let me go ahead and see what it was. But in 7 days, okay, about 30%, about 36, 37% on Ethereum. Many altcoins were down 40 or 50% in a 7-day period of time. That was a crash if I've seen one before. Why did that occur? Well, it occurred for various reasons relating to Bitcoin. But I mean, the main reason I see for it occurring was traditional market related. Everyone kind of had this assumption, and this assumption is still the assumption that lots of people are making, and I still think it's likely, that the Federal Reserve would print their way out of any crisis, right? Any sort of recession that could have come up, they'd just print their way out of it, they'd do quantitative easing, and money would come in to assets, and the market would keep pumping until a regular market top in 2025. That's what everyone was kind of assuming, or most people were assuming that at least. And that was the baseline assumption. But, you know, what happened was bond yields essentially came in and started dropping massively, a bit earlier than expected. We pointed it out at the time. And when bond yields tank, it's basically the bond market telling the Federal Reserve to cut interest rates, right? Bond yields dropping like that is the bond market saying, hey guys, we need lower interest rates or we're going to keep tanking. And the fact that it happened at that point in time, we saw a Federal Reserve FOMC meeting a few days after, and the Federal Reserve chose not to cut interest rates, right? Which indicates they possibly were trying to do some sort of controlled demolition or controlled correction. They knew what was going on there. On top of that, unemployment is ticking to the upside. And as you can see, unemployment generally rounds out before spiking to the upside. And we are in the rounding out period. We're just about to spike to the upside according to the historical trends. And 8 out of the last 11 times that unemployment has spiked to the upside, we've seen a financial market recession, right? So a bear market in financial markets. Now, it depends how you define recession, but let's just say bear market in financial markets. Obviously, if unemployment does spike to the upside, that is something that is likely to lead to a bear market in financial markets. The SAM rule recession indicator, the SAM rule recession indicator, is something that points this out. Basically, this indicator works in that when it, you know, look, you can read the writing here. I'm just going to tell you right now. It's triggered, and generally speaking, when it triggers, we enter a recession, and it has triggered. It triggered recently. Now, it can flip back to neutral. The trigger can stop if we see a jump down in unemployment. And now, luckily, you know, we have seen unemployment claims go downwards. The forecast, as you can see in the highlighted data here on the right-hand side of the screen, we had 234,000. It was expected at 236. It was expected to rise, but it actually dropped downwards. Well, it didn't drop downwards, but the forecast was lower than expected. So that's good news. And this is what's led to the market pump, actually, right? This is what's led to Bitcoin bouncing off of its support zone at 57.5k, which we'll talk about a bit more in a second. But more importantly, this is what's led today to the S&P 500 spike upwards and start testing critical resistance zones. Now, I know I'm just rambling out information here, but I promise you I'm going to come and conclude and make it clear and concise for you. I just need to get all this out of the way because it's very, very important. I highly recommend you stick around. The S&P 500 had this 10-month long ascending support line. It broke it to the downside upon the Federal Reserve not cutting interest rates when they should have, which again was one of the reasons why there was a recession risk. And still is to a certain extent, and one of the reasons why Bitcoin dropped down as well. People were very, very fearful, right? They were thinking, oh, look, it's going to be an early top. We're not going to see the rest of the bull market. And luckily, the S&P 500 has managed to regain ground. It's broke above resistance, but now it's testing its real level that it needs to break above, right? The ascending support line stemming back from October, which is the level we broke down from, the level that led to the cataclysmic correction across all markets, including cryptocurrency, is being tested from a downside right now. And we need to break it, flip it, and continue to the upside. That's what the S&P 500 needs to do. So a very, very important moment with the S&P 500. We won't, unfortunately, get full clarity on traditional markets until we see the next FOMC meeting. We need to see that the Federal Reserve is destined to cut rates heavily, right? If they cut 25 basis points, this uncertainty, this fear is likely going to remain and linger. If they cut 50 basis points, it's going to insinuate that they are trying to kind of keep up with bonds dropping downwards and actually cut rates aggressively and potentially enter a period of quantitative easing and start printing money again, right? So it's going to depend on what happens with the Federal Reserve here to see what they do. We're not going to know fully until that meeting. That's in 34 days. But right now we do have a very good indicator, and that is traditional markets, S&P 500. If the S&P does come upwards and break these resistance lines, that will be a very good sign. It means that the thing that led to the drop across Bitcoin, across traditional markets in general, that line that broke on the S&P that led to these drops is recovered, and that would be a good sign. So I want to jump into Bitcoin here because I've established now that there is uncertainty lurking with traditional markets. Luckily, we've seen that uncertainty be combated with this move to the upside, but we are still in that uncertain period. We are still at a critical point with retesting this resistance zone. So now I want to jump into Bitcoin and show you how this affects cryptocurrency as a whole. Before we do that though, one quick thing I'll show you. The VIP group on Telegram, guys. If you want altcoin trading signals 4 times a week, with a 78% win rate over the course of 2 years of trading results. 78% win rate. I've run this VIP group for 2 years. All the wins, all the losses, fully transparent in a PDF document. I'm not scared to hide the results. They're all there. If you want to gain access to that group, as well as a market discussion group chat, you can discuss the market 24/7 with other members. You can do so on my Telegram VIP. Check it out, guys. We've had the price dropped recently. All the information's down below. Check that out. Let's get back into the content. Look at Bitcoin here. Just recapping what we looked at yesterday for the most part, but a little short-term update as well. We know for a fact that Bitcoin's critical levels are these 2 yellow lines on the screen, right? One of which stemming backwards from 2018, cutting through all of the important price action. I'm circling a few moments now. And as you can see on the drop downwards, we did drop below that level, but we actually managed to hold it on a daily candle close, which means it's still a valid level. That daily candle close lined up with the bottom of the channel as well. This overall structure is basically a descending channel formation, which is a bullish structure overall. However, we need to discuss that a bit more in a second. And the final level that's very important for Bitcoin, kind of the life support level for Bitcoin at this point, is a line stemming backwards from November, going through to here, which we held for support on the drop as well on the wick, which lines up with a support block at around 47k to 48k, which stems back from these levels in the price cycle and also this level here with the ETF release. Right, so what is going on for Bitcoin right now within this channel? Because that's really the important thing we need to look at. The channel is the overall structure. If we break below the channel, we're bearish. If we break above the channel, we're bullish. Very, very simple stuff. Within the channel, we are seeing interesting price action, right? The center line of the channel, so this white dashed line, this dividing level between the upper range and the lower range of the channel, is unfortunately acting as very strong resistance right now. It's clamping Bitcoin in a very tight price region, and it's leaving Bitcoin in a position of being threatened, because obviously if we're at the lower point of the channel, that means we're constantly retesting support, and if we break support, we're doomed. right? So we need to break above into the upper range of the channel so we can start attacking resistance instead and start getting back in a more bullish mindset here. The problem is the center line of a channel is a structured resistance zone, and it also lines up with various moving average resistance zones such as the bull market support band and the 50-day and 200-day SMAs, which you can see have been acting as strong resistance. So I've been saying on this YouTube channel, and I'll continue to say it today, for Bitcoin to be back in a good position, we need to be breaking above 65K at least, right? Getting above those indicators. But on a macro scale, I mean, realistically, we need to be breaking the whole channel to begin with, right? The whole channel itself, which would be around around 69K, which actually lines up with the 2021 all-time high. But to get back in a good medium-term position, we need to be breaking above 65, right? As for short-term, the critical levels on short-term, in my opinion, are basically where we are right now. I really don't want to be seeing Bitcoin go much further below 57K. I mentioned this yesterday while we were up here. We dropped downwards as expected. We've now got this rounding bottom formation, potential double bottom. I want to be seeing Bitcoin hold this level because that is the level which we have the highs for resistance back here and the first low back here. It is the local range support zone. I don't want to be seeing Bitcoin drop significantly below 57. If we do, that will be quite dangerous because if we look at the daily chart and we bring up the volume profile, what we see very clearly here is that, let me just show you, 57 is a spike in the volume profile. That's where the support is. Below 57, there's no real support, right? There's no support below 57 until we go down towards the bottom of the entire structure, which is down here at around 51K, which is, you know, this support zone back here from October. So if we don't bottom at 57, it's actually highly likely that Bitcoin swings downwards again and tests its macro levels. And obviously, if we keep testing the macro levels, we risk breaking them and then we risk ending this bull market decisively. So for me, it's very important for Bitcoin to hold the short-term level at 57K. That's what I want to see hold. If we don't hold that, I'm getting a little bit scared about the short term. So that's kind of my analysis on Bitcoin. Let's just wrap it up here and conclude. What have I talked about today? Just summarizing. I've talked about the fact that one of the reasons we saw the drop the other week was because of traditional market fears and economic fears of recession. Okay, now luckily unemployment has shown some early signs of relief. If unemployment does spike to the upside, that is likely to lead to a recession. At least historically speaking, we don't want to see that occur. Unemployment's seen some relief, therefore traditional markets have pumped upwards. They are now testing a very critical level. You know, if we break that level, that's very good news, but overall, we won't really know exactly what's going to happen until we see the FOMC decision in about 37 days. So there's going to be a bit of a waiting period here, a bit of a period of uncertainty. Within this period of uncertainty, we expect Bitcoin, for the most part, to be ranging within this channel formation. Right now, Bitcoin is acting in critical ways within this channel formation, right? It's testing resistance from the midline level. It needs to break that midline level, but overall it needs to break the channel itself. What it needs to do in the downside region, if we're talking about downside, is it pretty much needs to hold 57K, right? To remain in a healthy position here, to remain out of danger of breaking this channel, Bitcoin, you know, should be holding 57K. If it doesn't, we start to get a little bit scared. It's not the end of the world, but we start to get a little bit scared. So that's my analysis of the markets right now, guys. I hope you enjoyed it. I hope you found it useful. If you did, please go ahead and leave a subscribe, leave a comment, leave a like, hit the notification bell. That's really useful as well. If you want to get updated on, you know, when I release videos, they're all very time sensitive, so you need that. Again, Bitunix and Bingx, guys, best way you can help the channel for sure. If you want a good exchange, you can help yourself as well. 15% trading fee discounts with my referral links down below. Access to a potential 5,500 USDT in rewards, 4,000 for Bingx, both global non-KYC, never been hacked before. You literally can't go wrong with these exchanges. I've handpicked them for a reason. Check them out. My VIP group as well. If you want to trade altcoins with me on Telegram, 4 times a week posted. They're all in there. Check them out. And finally, the last thing I'll say is we have a trading course which is on sale right now. For a discounted price, you can get access to become a trader 10-unit course and learn everything you need to know about TA and trading. It's all there, guys. Read up about it on the website and throw us an email. The email address is on the website as well. We'll answer any questions you have swiftly. Guys, thanks for watching. Hope you enjoyed. I'll catch you tomorrow.